Do I need to sell this property because I can't get coverage? Are you seeing that already?
Yeah, you could replace your $2 million building for $1 million. If their building burns down, they don't get all their money. Whose fault is that?
So I guess let's talk about the changes that property owners could and should start making today before their next renewal, before the big surprise of the cost. And, I think we've talked about, preparing with inspections and angle stops. What could a proactive property manager or a proactive property owner do today instead of waiting for that renewal letter?
The best thing they can do that helps us approach the carriers is to give us good, solid information about upgrades that have been done to the buildings, roughly when they've been done, such as roofs, the plumbing, if it had to be redone, electrical systems, as they've been upgraded at all, fire life safety issues, are there fire extinguishers on the outside of the building? If there's not room to put them on the outside, or they on the inside of the units, smoke detectors, all of that kind of stuff has to be verified. And those are things that the inspectors look for.
Okay.
And again, these inspectors, and it's a little cynical on my part to say it, but they always look for something to be wrong. They can't just leave and say, you know what, this building's perfect. They're just not going to do that. They're going to find something that, there's a little bit of a crack on the concrete, so we got to fix that. That's one of the issues. So inspect the outside of the properties as well. The old style stairs that are the molded, they're concrete, but they're kind of a weird stuff.
They got like pebbles in them, and they're usually like plate. There's like a metal plate.
And yeah, those are good ones.
Oh, okay.
But these are actually, it's like a round bullnose on the ends. It's like a formed concrete.
Okay.
But a lot of times what they did when they built those is they would put sleeves in, steel sleeves, to accept the railings.
Oh, well, I see.
Exactly. And what happens is as it rusts, it starts to expand.
Yeah.
And as it expands, it cracks the concrete. So they got to watch out for those kind of things.
Okay.
The concrete that's cracked or what have you.
How about the actual insurance policy? Like, say I'm a property owner, I'm hearing about all these issues, I'm reading the CAL FIRE map, and I realize I'm in this zone. I know I've got about 9 months until my renewal, so it's probably too early to start talking with my carrier, but what should I look for in my policy or start considering to make sure I'm ready to go and I'm doing all the right things?
In terms of getting ready to replace it, you mean?
Yeah, to make sure that when it's time to replace it in 9 months, I think I've done all the inspections. Is there anything on the insurance policy, on the certificate of insurance, that is it, make sure my limits are right, make sure I have all the right coverage?
Yeah, those are things that you can do. At that point, I'm not sure that makes a big difference.
Okay.
Because, one of the things that we do replacement cost analysis on every property that we insure. Because honestly, one of the things that we found going through this whole process is there's some properties that are significantly underinsured. There would be nothing worse to say, okay, well, I've spent $5,000 a year to insure my building, and I had it covered for $1 million, but it's going to cost me $2 to replace it.
And there's a right, the carrier has a right to say, I'm not going to pay out that policy if you don't have enough insurance, right?
There are penalties of what they call co-insurance.
Okay.
So it's where that comes into play is if you have a partial loss. So if you have a building covered for $1 million and it should be $2 million for replacement, you have a 50% co-insurance. What that means is that in the event of a partial loss, so if you have just a burn out one unit or something, and it costs $100,000 to fix it, they're only obligated to pay you $50,000 because of the co-insurance penalty.
Is it the same as a deductible at that point?
No, the deductible's on top of that.
Oh, wow.
So that's one of the things that we look at very close.
I shouldn't laugh because it's not funny, but it's just like, it's one of those moments where I'm laughing. It's like, what else do we have to consider as a property owner, property manager to consider? It just feels like it's this long list. And part of why we do these podcasts and have these conversations is to help prepare people. But the list just feels so unwieldy right now. Like,
it does.
Where do you even go?
But yeah, just the constant inspections like what you guys do. And maybe you and I should sit down and we'll make a list of specific things for your people to look for that can be addressed in advance.
Yeah, we can absolutely share that with anybody that's watching this, of just like, here's the checklist that we create of all the things. We'll take a look at the existing inspection and just keep improving it as we go.
Yeah, like as a classic example, you talked about the broken concrete at a walkway or driveway. You have probably no more than a half-inch rise in a crack. That needs to be dealt with either by grinding it down, filling it in, It's, whatever the case may be, but it has to be addressed.
Yep.
Just a regular surface crack, concrete does that. That's not a big deal. But it's the other thing they look at too. The other issue these days with the inspections are railings on multi-story buildings. Number one, they don't like railings that are horizontal. If it looks like a ladder.
Yeah, that makes sense.
The second part is that the railings that have vertical posts in between, they can be no more than 4 inches wide, the openings, because the fear is, and I'm sure they paid a loss somewhere, that a kid stuck his head through, got stuck, suffocated, whatever. So now it's required to be 4 inches or less. There's an easy remedy to that in that they'll allow you to put like a mesh cover on the inside, but a lot of people aren't real thrilled about that because it takes away from the.
Doesn't look great.
It looks bad on the building. So, but if you want to get insurance, you have to basically suck it up. And as again, one of those things where we become the bad guy.
We've had properties where we took over management and the gap is much larger than 4 inches. We've even gone to the extent of welding pieces in between the gap. Looks a little better, but
right,
symmetry's off for sure. Symmetry's definitely off.
Yeah, but it's also a much bigger expense.
Absolutely.
To do that. So it could be, but that's what the insurance industry is dictating these days.
We're at a point where it feels like there will become a point where, and I think this might be the point where there are property owners who have to really consider, do I need to sell this property because I can't afford or I can't get coverage?
Right.
Are you seeing that already? Feels like we're almost there, or we might be there this year with where we are to these costs.
The biggest hurdle these days, for us at least, is cost. Availability of coverage is still there.
Okay.
It's still a matter of what is it going to cost. And a lot of that depends on the upkeep of the building.
Being proactive, being preventative.
Exactly. The structure, like it's one recently happened where the earthquake retrofits on apartment buildings, we had to put gray beams in across the openings and everything. This one had not been done yet.
Okay.
So they made them do that before they would insure it. But once it was done, they did it. And that was a building built in the 70s. So for building standards, it's relatively new.
Yeah.
But those are the kind of things that they can force you to do. It's just, in a lot of ways, it's kind of obscene, some of the stuff that they make you do with it. But it's, as far as your guys are concerned, it's just, if we take a good solid look at the properties and, document things that need to be fixed. If you have railings that are rusted, they need to be repaired. The upkeep of the building, if you have peeling paint on the outside, needs to be taken care of because they look at the upkeep and pride of ownership.
I think a lot of it is, it sounds like for the insurance carrier, they're seeing, I hate to use the analogy, no pun intended, but where there's smoke, there's fire. You have the chip paint and you don't care enough to take care of the paint. You probably don't care enough about other things as well on the preventative side.
Other things go by.
So I can imagine that there are property owners that it may just be cosmetic and they've been taking care of all the structure, but now they need to reconsider.
Right.
And I think, when I think about the things that we already do for our clients of doing the inspections, both interior and exterior, and having the photos and having a work order process, those are kind of things that it sounds like from our conversations are helping our clients not get these big surprises. What else could we recommend to people? Is there anything like technology-wise that you're seeing? And we talked a lot about, in the past, we've talked about Google Maps and the fact that the carriers are using Google Maps to see aerial views of what, if you have a blue tarp on your roof, probably a problem up there.
A blue tarp, or believe it or not, if they look on the Google Earth map and see mold on your roof, they want that taken care of, which I'm not even sure how you would do that, to be honest with you. But
I think we heard a mutual friend told us that on her home there was maybe like mildew on her concrete slate roof, which there really shouldn't. That's not even an issue. It's probably just from the moisture in the area where she lives. But she probably had to power wash or something.
That's be about the only way I can think of to fix it.
Yeah.
So those are kind of the issues. But those are the issues that if those things can be taken care of, just the pride of ownership, I guess, for just a general term, will go a long ways towards the availability of coverage. And again, availability of coverage is there. It's just, what is it going to cost? And that's the unfortunate part.
So all of these things, the being proactive, being preventative, doing the inspections,
yes,
having the pride of ownership, could it make your premium less expensive?
Theoretically, it could. Again, that's going to be dependent on the area, the construction of the building, those kinds of things.
Does the insurance underwriter have that ability to say, hey, there's less risk here because I can prove with, like I'm thinking for ourselves, with our clients, we have time-stamped photos and we have proof, like true proof that this stuff has been done with receipts and the data. Could the underwriter theoretically say, AIG, CIG, whoever their boss is, whoever they work for, the risk is a little lower, we can charge a little less here?
It's entirely possible.
Okay.
Not going to say that it's likely.
It's not guaranteed. You're not going to guarantee it.
Right.
I'm not going to show you back this video that you guarantee it, so you got to make sure it happens, folks.
Yes, but it's, again, doing all of those proactive things will probably guarantee your ability to buy coverage. It's just a matter of what's it going to cost.
Yeah.
And I hate to say that because, I've had more than one person tell me that, you guys are benefiting from these huge rates. Well, I got to pay for the Tums because of the acid indigester for being the bad guy. We deal with people who are our friends.
You have to be the bearer of bad news in every one of these situations.
Exactly, the bad guy. But that's why we try to communicate in advance what it is you're going to be staring at.
What if a property owner that's watching this video or property manager that's watching this video doesn't have an insurance broker like you and your team at Best Insurance that is proactive and is warning you and is doing the free lunch and learn for our staff? How do they find somebody like you? Maybe they're not in San Pedro or not in LA. Can they still reach out to you?
Yeah, we do business across the country. So
Great.
That's not, we're licensed in many states.
You ready for all those phone calls from everybody?
Well, let's see what happens.
Because I think you and I have known each other for feels like my whole life, but
a long time.
We just started doing more and more business together probably in the last 4 years.
4 years, yeah.
And a big part of that is because of the business we were doing together. It was so much communication and being proactive, and that's why we wanted to keep moving more of our clients that were willing to over to you guys. It doesn't feel, at least it's been in my experience, that's not the typical insurance carrier, or insurance broker rather, that has the time or bandwidth to do that.
Typically not.
Is there a reason why you guys are able to do that at scale?
Well, I guess to be described that we just still do things the old school way.
I was going to say it's probably not like technology and leveraging technology. I was telling one of our property managers exactly that. I think it's just that old school way of thinking that they've always kept that relationship.
And honestly, I think that a lot of people in the insurance industry view themselves as salespeople.
Got it.
We look at it the opposite way. We are risk management people who happen to sell a product.
Your help first.
Yeah. So you identify the risk and you help fill that gap.
Okay.
Which is how we operate. So it's, we've actually had clients that have backed away from us, or potential clients, because of what we've told them in terms of, well, this is what you need to insure your building for, and all that. It's like, no, I don't want to do that. Well, then I'm sure you can find somebody that will.
But they might have been able to.
Yeah.
Well, years ago. I don't know that if they didn't take that advice 5 years ago, that they're as lucky as they were then.
And it's, some of our philosophy of doing things that way is, I guess, a little bit self-serving, because we, like any other people who give advice, we have to carry professional liability. And if we give somebody bad advice going, yeah, you could replace your $2 million building for $1 million just to keep your premium down. Well, if their building burns down, they don't get all their money. Whose fault is that?
Yeah, absolutely.
Or at least the accusation will be made. So, that's why we try to convince people that you got to listen to the risk management advice as much as you do what the insurance advice is, because they go hand in hand.
Where would you recommend, again, other than calling you and getting all of this information directly, is there a resource or anything that you've seen out there, whether it's a website or a book that property owners and property managers could read or reach out to get more information on the steps they need to take?
Reading a book is difficult because there's so many technical aspects of the business. I mean, it's like we talked about at the Boys and Girls Club yesterday. It's, you can show people the summaries and the proposals and the coverages and everything, and to the layman, it looks like Greek. They have no idea what it means. It's just a bunch of numbers and words. So trying to read it, I mean, it's taken me 45 years to get to the point where I am now in terms of knowledge of risk management and what to look for and how to deal with things. And we learn new things every day.
I always forget that you're kind of born into this business as well.
Yeah, with my father being a state farm agent, yes, that's true. Little different aspect of what we do.
Mm-hmm.
But it's, again, like we talked before, it's the same, only different.
Yeah.
Same industry, different philosophy, different operations. And, we were fortunate enough to have the opportunity to be where we are, which is more to my mentality. I would be hard pressed to work for one of the direct writers and only do their thing. I like too much deal with people to, we negotiate things.
Part of it of deal making you get to do, and he's out negotiating that you get to do with the carriers and underwriters.
A lot of behind the scenes stuff. Sometimes it's successful, and these days, more times than not, it isn't. But it's not for lack of effort. It's just, that's what the industry dictates at this point.
Yeah, absolutely.
Which is not positive, unfortunately.
So, Ken, I'm not going to hold you to the prediction then. We're gonna put the two videos together side by side. 6 months from now, what's your prediction? What happens to the California insurance market?
You're going to see some availability issues in the higher fire hazard areas. You're probably going to see rates of those areas with the availability of coverage go up significantly.
200%, 500%.
I mean, it's 200 to 300%, I'm guessing.
At least 200%,
if not more. They're going to be more stringent on the fire hazard protections, the defensible areas around the buildings, fire extinguishers, buildings that have sprinklers. They've got to want to make sure they've got to go look at the tags on their sprinkler standpipes to make sure that they've been inspected within the tolerable time. So 2 inspections. You have the annual one plus the 5-year where they drain the whole system and check it out. So they're going to be looking to make sure that all of those things are being done.
And just looking for a reason to non-renew, or
just looking for a reason to continue to insure it.
of the opposite?
Yeah, I'm referring to the inspectors that happen after we've placed the policy. The non-renewals are just because that's the philosophy of the particular carrier.
Got it.
But the inspectors are out looking for reasons to do that. So it's, we could see a 180-degree turn in 6 months, or we could just see it status quo. But, a lot of these things are going to be kind of unpredictable at this point as far as what the rates are going to be and all that. And it's the one thing that we probably will see increases on is on the liability side, because there's no prospect for tort reform in California at that moment. It basically forced people to have a reason to sue somebody as opposed to just filing a lawsuit because, it's just.
So hold on. The same, but it'll be different, but hold on.
Yeah, exactly. It'll be an interesting 6-month period, and it'd be interesting to look at this video 6 months from now just to see what the differences are, how it's changed. But unfortunately, at this point, I can't predict anything positive. It's just insanity will continue.
Well, thanks for at least sharing all the knowledge with me and with us. And I think the best thing we can do is just understand the reality of the situation and prepare for it, and can be proactive and really just, for us as property managers, prepare our clients and do all the things that we can to put them in the best possible position in an environment that quite literally is there, that's a perfect storm. And unfortunately, we just have to be prepared for it at this point.
Yes, it's what you guys are doing with the inspections, and your clients or anybody who owns rental properties, be it industrial, commercial, residential, pride of ownership is a big thing.
Yeah,
it's huge. Like when we talked about, you wouldn't think about it, peeling paint as being a problem, but it goes back to the pride of ownership.
Yeah,
and that's a huge factor.
it makes some sense to me, for sure.
Well, so
thank you, Gary.
appreciate your welcome.
Anthony A. Luna is the CEO of Coastline Equity Property Management, based in Southern California. As a respected Forbes and Fast Company contributor, Anthony shares insights that help property management professionals excel while giving back to their communities. His upcoming book, Property Management Excellence, will be available in 2025 on Amazon, Barnes & Noble, and bookstores worldwide.